Good morning, everyone. It's so great to see so many familiar faces in the crowd all in the same place. Welcome to the Future Capital Annual General Meeting. I know a lot of you flew from very far away to join us today, so we really appreciate you spending time with us today. So this is the second day of our AGM. We had a very exciting tech tour yesterday to see some of the robotics companies that's in our portfolio. The spots were limited, so for those of you who couldn't make it, so let's start today with a replay of the tour yesterday. Yep. So coming up next, I would like to welcome our founding partner, Ming Huang, up on stage.
Good morning, everyone, and welcome to Future Capital AGM. And thank you for travel all over the world joining us today. And since we're in a city of forever young and forever innovative, let's first watch a short video about Shenzhen and some of our portfolios. Yeah, please.
40 years ago, Shenzhen was still a fishing village. Today, it has become a global tech powerhouse, the heart of the world's hardware supply chain, and a fast-emerging center for AI innovation. They call it Shenzhen's speed. Over 80% of China's hardware supply chain is based here, where 90% of components can be sourced within an hour's drive. Across the city, you'll find 74,000 robotics companies and more than 2,000 AI firms. In Nanshan District, a 10-kilometer robotics valley can take a robot from prototype to small batch production in just 1 week. By 2025, centered around Huaqiang Bay, within a 1-kilometer radius, there are 1,300 design firms, 3,200 R&D teams, 1,200 testing providers, and nearly 3,500 mass production suppliers. This is Shenzhen. Forever young, forever innovative, forever moving forward.
Thank you. So as you can see, Shenzhen is the city that captured our AGM slogan, where the future is being built. And for those of you who attend our tech tour yesterday, I believe you see it all around you. So during the past 12 months, AI shows us how fast the future can learn. And Shenzhen shows us how fast the future can be built. And Shenzhen is just a snapshot of China. So this is a city embodies a DNA of rapid iteration. Making things is in its blood. From design to prototype to mass production, all within just weeks. And thousands of manufacturers, engineers, both hardware and AI talents, packed into this one metropolitan city, trained by DJI, Huawei, and Tencent. And it's the world's most concentrated hardware supply chain center. And here's what matters to Shenzhen's utility. So make it work, make it useful, and ship it fast. While others still debate whether AI is a bubble, Shenzhen already embeds AI into the products and ship them globally. So that's Shenzhen's way. And China carries that DNA at the national scale. So in just 40 years, leapfrog from agriculture to the world's largest manufacturing ecosystem and the global tech powerhouse. And in the AI era, China offers something unique, the fastest path from algorithm to actual products, from models to applications, all in one country. And what's more important is growing scientific evidence showing us something crucial. The human cognition is not just brain-bound, it's embodied. So AI needs eyes to see, hands to manipulate, and feet to move. And all this feedback data will come back to train the next level model. And the real intelligence comes where the reasoning combined with the physical experience. So we believe the next breakthrough happens when AI moves from the clouds into the real world, into the vehicles, into the robots, into the factories and homes. And this is exactly what China's ecosystem enables. So 2 days ago in Shanghai, some LP asked us, are you guys surprised by DeepSeek? And our answer is not at all. China is not just adopting AI or catching up in AI. It's producing breakthroughs. So DeepSeek was not an accident. It's a preview, the tip of the iceberg. And more DeepSeek moments are coming across every tech frontiers. So above the waterline, here's something already happened. Li Auto's autonomous driving versus Tesla FSD in China, 4 times fewer human intervention needed. And the Minimax recently released M2 model delivers a strong coding and agentic intelligence. Climbed quickly to global top 3, a #1 in open source model by token usage on open routers. And even in the space tech, Elon Musk comment a small Chinese startup called Landspace and said their recent Zhuque 3 could outperform Falcon 9 in 5 years. But of course you know Elon, he added, by then Starship would be in a different league. So let's see how fast the Chinese team can catch up. And below the waterline are the foundations built over decades. So supply chain depth, engineering, and massive production capabilities, and also tons of talents. We all know now China produces almost 50% of the world's top AI researchers. And not only in AI, also a lot of talents across different scientific fields. And also massive data. So what does this mean in the AI era? So China is one of the very, very few ecosystems that everything sits in one feedback loop. The talent, the IP, the infrastructure, the power network, and the demand. So all connected, reinforcing, and iterating. So that's why we believe 90% of the next generation AI native hardware or robots founders will be Chinese. And 50% of the breakout agents, especially to C or to prosumer, will emerge from China. And A16Z's recent agent list already showing that trend. So our headquarters is in Beijing, and we brought you guys here to stand at the launch pad of China to see the iceberg beneath the waterline. So China spent 40 years showing us what is possible, and the AI spent 4 years showing us what is inevitable. And today these two exponentials meet, and let's turn them into results. So now let's quickly share with you what Future Capital has built over the past 11 years. So we started as a $41 million angel fund and focus on tech investment since day one. And we now have grown to a 1.1 billion today. And our mature vintage delivered 27% IRR and 6x growth returns. And more important, I know LP want to hear this, we continuously to return cash, even in the tough period, like last year. We returned more than 128 million exit proceeds to our existing LPs during the past 18 months. So our journey reflects the trust earned through cycles. Our LP base also expands from the super entrepreneurs in China to global institutions. We are grateful to have partners join us from US, Europe, Middle East, Southeast Asia, South Africa, Japan. And thank you guys for your trust. And then let's look at the market we are in. So China's VC market has recalibrated after the COVID. Many mega funds and the tourist investors retreat. There are actually not so many active US dollar players left on the market. But the serious players remain. And the new capital stack is rising, which are the CVCs. They're Alibaba, Tencent, Xiaohongshu, and CATL. And today we have our special guest from Alibaba, the head of AI and Frontier Tech Investment, and Shanshan, and also the founding partner of CATL US dollar funds. So please stick around to this afternoon's panel when AI meets energy. And the early stage deal volume, as you can see, hits a bottom last year. It's about 50% of the 2021 peak. But we are starting to see the sign of recovery this year. So let's look at our focus area. So the competition in AI and smart hardware is particularly fierce. Some familiar names return to the market this year and use their same old machine gun approach, spraying into the early stage deals, and sometimes with a crazy valuation above 100 million or 200 million. But we stay steady and disciplined, so about 15 deals each year. And in this environment, we are investing even earlier. Our average entry valuation for the early stage deal this year is about 15 million, with more than 10% ownership. So earlier stage and more ownership. And I want to point out, in the AI era, being early matters more than ever, because everything moves faster. The model evolves faster. The user ramp up is faster. DeepSeek hits its first 100 million users in just 7 days. So never happened in human history. And the revenue growth is faster, and so does the valuation. So the 12 months or even 6 months late can mean the difference between the entry valuation of 40 million versus 500 million. And that's exactly the case of our Fund 5 portfolio, Love Art. So if you can't get in early, you will have to pay a much, much larger premium later. And for Future Capital, we have the DNA of being the very first partners of those great ventures. And we have the ability to go even earlier. So in the EV fields, in early 2014, we researched lithium battery technology and autonomous driving. So we became the first and only angel investor of Li Auto. And now it's a $21 billion NASDAQ-listed company. And in the Gen AI, we move early again. We invest in Minimax in early 2022, months before the ChatGPT launched. And Ye today is with us. I can still remember the first time when I met I.O. in a shabby hotel in Beijing. That's in about this time, December 2021. And I saw this software developer guys keep coding on his laptop and sitting at the lounge. And to be honest, I didn't realize at that time this is a guy who will create the world's top 3 models. And now they are preparing their IPO very soon, and likely the first large language model going public from China. And in the AI agent application and AI native hardware and robots, we were 12 months ahead of the market again. So the results shows now 4 out of the 6 top AI supernovas are our companies. And almost every investment we made since 2024 received at least 2 or 3 up-rounds now. So, like in life, the dots connect. These are all the sectors Future Capital has focused during the past 10 years. And like I mentioned earlier, the next breakthrough of AI is when AI moves from the cloud into the real world, into the EV, into the robots, into the factories, and into the homes. And we are very few funds in the market who invest across digital and physical worlds since day one. So this convergence and the pre-trained data sharpens how we see the future, and also let us can go even earlier in the next decade. And for those of you who might be familiar with the model training, alignment is crucial for the post-train. So Future Capital is known for our picky and the unique taste of the founders. We back outliers. So Liao Toxiang was a high school dropout, but who later reshaped China EV's industry. And Chang Wu of Land Space was an HSBC banker instead of a rocket scientist. But he built the world's first liquid oxygen methane rocket that reached the orbit, which has the potential to outperform Falcon 9 in terms of the payload performance and retrievable. So for me, it's important to build a culture that doesn't chase the hype or just a shiny resume, but focus on building conviction on those non-consensus founders. Because only the outliers can build great products, which eventually change the world. So a big part of my job is to align this value and taste to my young team members. And to be honest, alignment with people is much harder than alignment with the machine or with the models. So for anyone here with a wife or kid, you know exactly what I mean. But for an organization, alignment is a culture building. So we'll continually do that. So since our last AGM, it's been a busy year. Our team interviewed and reviewed more than 3,000 deals, and we deployed $55 million with 15 deals. And our AI thesis 1 year ago has been validated. Now the 4 AI supernova companies are Minimax, Lavard, Genspark, and Aku, and the momentums are getting strong across the portfolio, so we expect more to come. And we also changed how we operate from matrix to distributed and small agile teams. And each team owns its sectors. So we want to empower the young people who is closest to the front line. And by this structure, it also allows me to stay closer to the front line, which speed up the whole deal cycle. And Future Capital is also forever young, and we are getting younger. So our median birth year is 1997. So now I'm the outlier of the team. And we promote 2 young professionals, and those 2 ladies are famous on the market as the true fighters. So some big shot WeChat me the other night because his team lost the deal to us, and he's kind of complained, said, "Hey Mingming, your team is good, but they are a little bit too aggressive." Well, I of course took it as a compliment. So I told our young ladies, be more aggressive and go even earlier next time. So all this change is better prepared for a fast-moving AI era. Now I will let my team to share with you where we are heading to next. Moro.
This graphic is okay. Yeah, we just wanted to, I'm sorry, the graphic is not coming through for some reason. But we just wanted to share with you some of our observations in China's AI ecosystem. So first of all, if we all think about the future of AI, at least for the next 3 to 5 years, there will be 2 centers of gravity rising in parallel. The US ecosystem and the China ecosystem with a very dynamic overlap. Each will be centered around its own LLM brain, and around both you will see similar sectors converging. So EVs, robotics, hardware, and applications. These 2 ecosystems have very different strengths. So while the US leads in semiconductors, frontier models, and cloud, China leads in hardware, energy network, and open source. So even at the model layer, the strategy is very different. So the US pushes for raw model performance, China pushes for model efficiency. And if you look at the capital layer, you'll see the contrast as well. So in the US, you see the market pouring trillions of dollars into the infrastructure layer. So that's chips, models, and cloud. And in China, the state. So the state takes on that load, which means that the market players like startups, they can focus directly upstream. So that's why we say in China, we focus on the applications. But now we're seeing a clear signal. Both ecosystems are now moving in the same direction, which is upstream. So, and like every industrial revolution of the past, value ultimately accrues upstream in the application layer. So in AI, for an early stage fund like us, that means we focus now on applications, robotics, and hardware, where product meets market at scale, and that's where venture capital captures the steepest part of the curve. And we believe that the smartest founders are going to sit at that dynamic overlap. So you met a lot of them yesterday, and you'll meet them today. We're looking for founders who understand this difference and who can leverage the best of both ecosystems to build for the global markets. So that's what we're looking for. Now, let's move on to observation number 1. This is what we see in China. Model is not winner take all. Now, the technical gap among frontier models is shrinking down to just months. And at the same time, you have open source rising very quickly. So you'll see on the left here, 6 out of 8 open source models are Chinese. So when you actually have frontier models and open source converging this quickly, what does it mean? It means that the model stops being the moat. So where does the value go? The value moves upstream to how the models are used, which we call the context layer. So context provides the right information, tools, and memory in the right format at the right time so the system can choose the right model to best complete the task. So this is where the last mile application builders can capture the most value, and these are the players we want to back. So as an example, our portfolio GenSpark, so that's in US dollar fund 4. They are a vibe working agent and a newly minted unicorn. Their engine reads the tasks, they profile the models, and routes to the best one each time. So that just means lower cost, higher success rate, faster answers. So GenSpark has been racking up $50 million in AIR in just 5 months. So this is an example of context-driven orchestration, turning this model diversity we have nowadays into real outcomes. So a simple way for you to understand context is, so without context, even the best, the best models, like a fresh Ivy League grad, very smart, they're not ready for real work. So context engineering is effectively the on-the-job training that turns these smart people from unusable to great. One question that we get from LPs a lot is, we see OpenAI in the US is very good. Is one model going to dominate the entire stack? Why wouldn't they be able to do everything? So from what we see on the ground in China, we think the opposite. So what we see is that more model capability and better context quality actually has what we call a multiplier effect. So just look at the structure on the right. Let's take LoveArt, for example. So LoveArt proves this. They're the world's first designer agent. So what they do is that their context layer learns each designer's preferences and tastes. So, and they orchestrate the models underneath. And they've done $30 million ARR in just 3 months. This is in Fund 5. So when Nano Banana was launched recently, we were actually, frankly, a little concerned for them, because Nano was very strong. But it turns out LoveArt was able to orchestrate Nano, was able to orchestrate Reveal 3 and Flux, and their traffic actually didn't stop. It didn't slow down. It actually doubled. So we're seeing this across a lot of our startups. And this is called the multiplier effect. Now, let's go to observation number 2. The utility era of AI is here. I just want to stop and take a moment. Can we take a poll here? How many of you sitting here actually pay out of your own pocket for AI tools? Not the cheap, the expensive ones like ChatGPT Pro, $200. How many? Raise your hand if you actually pay for it. Okay, that's half the room. That's a lot of people. So we took this exact poll in our investment team a couple of days ago. Ming and I were surprised. So every single one of our investment team pays for at least 1 to 2 of these AI tools out of pocket. We don't reimburse them. And you don't understand, because for anybody who knows Chinese people, to get Chinese people to pay for their own software is rare. And you asked them 6 months ago, nobody paid. I'm the only one who actually paid for ChatGPT Pro, but nobody else paid for it. So obviously with you guys as well, there's a difference. So something's changed. So why do you think you're paying for it all of a sudden? Maybe because it's actually making your lives significantly better. And that's called utility. We call that utility. So obviously as a tech fund, we can't define utility like that. We need to find a technical term for it. So we came up with task completion rate. So the inflection point for utility is task completion rate. After GPT-01 and Sonnet 3.5 launched, agent task completion rate stepped up from less than 1% to 30% plus. So that's when revenues, you see, they hit an inflection point. So just look at Cursor on the left. So this is Cursor. With Cloud 3.5 being launched, Cursor's task completion rate jumped. So Cursor suddenly got more tasks right on the first try, and they didn't need any rewrites. So that's how their ARR took off. So if you look at the ARR curve of China's supernova companies on the right, you can find a similar pattern. So what does this mean for VC? I think nowadays going forward, looking at ARR is just simply no longer enough. It could be the hype. We need to find other indicators and benchmarks to specifically measure utility. And we're coming up with it as we go, right? So for example, we'll have to assess retention rate, unit economics, and et cetera. So that's number 2. Lastly, I'll end with, I think there's a lot of excitement about humanoids out there. Well, we want to say that the humanoid that you see today is not humanoid intelligence. We are not there yet. There's multiple steps in between. And most of what you're seeing out there are just mechanical machines. So how do we know this? We've been investing in humanoid very early, in 2022. We invested in Limix Dynamics, which we saw outside yesterday, the moving robot. They're a leading full-size humanoid company in China. We also backed the components. So we backed 2 agile hands. You saw Wuji yesterday, we got another strong one. So because of these early investments, we've stayed cautious about the hype now in humanoid. What we've learned is that unlike what you see in large language models, the GPT-3 moment for humanoid intelligence is not here yet, because we do not have a general foundation action model, and that needs to be trained on massive multimodal real-world manipulation data. But we're progressing. So today, embodied perception are those companies you see on the right side there. So they do embodied perception. They give robots eyes, touch, and hearing to learn. Embodied action gives them manipulation and locomotion. Learning is now moving from the internet to the real physical world, and this is really important because perception and action in a loop is how intelligence grows. The same way that you learn. You don't want to just learn from reading, you learn from reading and also doing together. So that's the loop that humanoid robots need. So more modalities and more degrees of freedom is going to raise the ceiling of general intelligence. So we're going to expect major breakthroughs in this in 3 to 5 years. And when this foundation model actually finally arrives, a lot of people nowadays, they say, oh, there's no applications. We don't see applications for this. A better question to ask yourselves is, when this general model arrives, who is going to be winning? Who is the winner from all of this? And in our view, it's got to be the deep companies with deep vertical contacts, who's already out there in the physical world learning today. So, and obviously, this is also where China has a real advantage, as Ming mentioned. We've got massive real-world environments and hands-on, data at scale. So when the breakthrough arrives, we're prepared for this. So Eric will talk about this very soon. In terms of shaping our investment strategy, we think the near-term opportunity in this so-called humanoid intelligence is actually purpose-built AI-native hardware. like the wheelchairs you see out there. Devices that use today's embodied capabilities to deliver true utility in the physical world. I think with that, let me pass to my colleagues to discuss our investment strategy.
Thank you, Muro. Let me share our AI investment strategies. If I had to distill the strategy in one sentence, it would be investing in AI as a system, not a silo. On the slide, on the left of the slide, you can see the AI full stack from application layer on the top through infrastructure and the model layer down to AI data center and energy at the bottom. Since 2022, AI has been our main investment focus. We have been investing across the whole stack, backing leading startups in each segment. Why do we emphasize the system level view rather than siloed thinking? Because AI evolved so fast that only a whole stack view can help us to know where the AI industry truly going. For example, in Q3 2024, we saw NVIDIA's H200 and H20 started shipping at scale, and we knew NVL72 also will be shipped in 2025. This led to a steadily drop in token costs. And in September 2024, OpenAI launched O1. It's the world's first widely used reasoning model. In November, Anthropic introduced MCP. When we saw all of this, so at the end of 2024, we were convinced that AI application were entering agent era. So we doubled down on AI agent investments and encouraged our current portfolios, such as LibLib, GenSpark, to move forward to AI agent products. The same forward-thinking system-level view guides our investment across the whole stack. So we outline some promising things in different segments. That's what we will focus on in the near term. In the application layer, there are three promising things. AI worker in vertical film, personalized multimodal experience, and purpose-built AI hardware. My colleague and I will elaborate on this shortly. First is purpose-built AI hardware. Embodied AI has not yet reached its GPT-3 moment, but embodied perception and action had already made big breakthroughs. So in near term, we buy purpose-built AI native hardware that become people everyday co-pilots and companions, enhancing how they work, treat, and live across both digital and physical world. We are not trying to buy generic gadgets that a bit of AI sprinkled on top. We are trying to find devices like AI-defined core functions, or even redefine the product category. So to make sense of the product landscape, we use 2x2. You can see here. On one axis, we split utility to two types. One is task and performance copilot. Another one is more emotional or identity-driven product. We call it emotional and identity companion. Both of two cover human needs in digital world and the physical world. In the top left, you have digital work and knowledge copilots that help your work hand-free, low friction, automatically captured, like Cloud, the AI recording device. In the bottom left, you have physical assistive tools and augmentation copilot, like robot spectral, the smart wheelchair, the PalmBot, the AI tennis coach robot. We also pay a lot of attention to emotional and identity companion. On the right side of the slide, we share our some investment plans. I just highlight some highlights. We look for product first, purpose-built and AI-native device. We prefer founder who are product CEO or PM with clear path to PMF. We prefer companies that are global from day one, has scalable H+ cloud architectures, and defensible data loop. Put simply, they are the key sentence for us. We avoid generic gadgets and me-too devices. We invest where AI plus hardware together create a new purpose-built product category and user behavior. So this is what we think about AI hardware right now. We will keep very close eyes on the long-term in the evolution of embodied AI. As I mentioned earlier, robot spectral is an example of physical assistive and augmentation copilot. So in the next slide, I will share what they are building and why we are so excited.
Society is aging, but moving around is still a big challenge for many people on traditional mobility products. As a physicist and experienced engineer in robotics, I believe we can do something much better.
The Strut EV1 is a new form of smart personal transport. At the heart of the EV1 is our smart drive assist technology called Copilot. Copilot supports you in narrow indoor spaces or crowded urban areas, which can be a real battle to navigate in a mobility device.
EV1 can be taken apart into 5 parts to fit into a regular car, and those parts should not only piece out together, but due to the sensors, actuators, and intelligent functions, they also have to maintain high-speed data connections and high-power electrical connections against all the shocks and vibrations.
We brought our first prototypes out for real-world user testing. We were nervous. Would people be intimidated by all the technology in the EV1? To our surprise, most people, even in their 80s, were comfortable, if not enthusiastic, to try new technology which could make a real difference in their lives.
Let's dive deeper into the investment strategy in personalized modality. What we call the next experience engine. Why is now the right time to invest this sector? Because there are some type inflection points already converged. First, agentic reasoning. Second, persistent memory, and cinematic majority generation. From the earliest product in the middle, we can, this shows the 3 technologies are already converting into companion user experience. But new products and new experience won't be just WeChat plus AI, Netflix plus AI, or TikTok plus AI. We think young and AI native generation, they are looking for new methods to express themselves, feel their emotionally fulfilled. That things maybe not text, endless feeds or short videos can simply offer for them. Yeah. And Chinese founders have strong track record of building customer products. So they are uniquely positioned, well positioned for this wave. The founder we are looking for should have 3 traits: product instinct, time judgment, and velocity. We think three of these are must-have. So next, my colleague Evan will share our thoughts in AI workers in vertical fields. Thank you.
Thank you, Eric, and good morning, everyone. I'm Evan, Managing Director at Future Capital. So today, I want to share you with our view of the agent investment landscape. Let me start by this. Let's don't think about software plus chart. Let's think about workers, hireable, auditable, accountable entities that get the work done, get paid for results, not seats. We map opportunities across 5 levels, from single tasks all the way to agent-first organization. First, the foundation, single task. It replaces high-frequency, end-to-end workflows. This category hit an inflection point this year, and the companies we backed 1 to 2 years ago are now seeing ARR take off. Second, role automation. Now we are talking about real responsibilities, not just task lists. And the unlock here is accountability, not just capability. Take Lucius, our portfolio company. It runs Discord communities autonomously. From moderating content, engaging members, hitting growth targets, the whole job. Then level 3 and level 4 are more focused on the enterprise value. So they are multi-role orchestration and agent-human hybrid. We have already invested in both. Jelly Alter manages influencer marketing, and Ivy handles legal works. Then the last and the end state, agent-first organization. This is the post-human labor economy. It sounds radical, I know, but it's maybe more closer than most people think. Okay, then we move on to the investment criteria. We look at many factors, but let me highlight 3. First, pace. So previously, in the SaaS era, products are carved like sculptures, years of chiseling towards perfection. But in the agent era, products are not achieve perfection in that way, because refinement now is learned, it's not hand-carved. Whoever captures users first begin to compounding preference data first. Reward loops kicking, speed wins. Second, TCR. It simply means that this actually replaces work without creating new problems. If your agents need human rescue every few steps, it's not enterprise ready. It's just expensive intern. And third, context, especially system and domain know-how context. Because for enterprise, the context is both broader and stricter than consumer context. Like great companies won't throw their new hires into chaos. They onboard, train, and give guardrails to the new hires. Similarly, great agents must do the same to the base models. Okay, that's all for me today. And next, I'll hand it over to Muron.
Okay, this wrap up Future Capital session. We talk about going earlier and focus on utility. And we invest where token turns into tasks, and task turns into business outcome. But the true utility of AI is not only on those charts or benchmark that Moron just mentioned. It's a human moment. That severely handicapped lady who cried on Strut smart wheelchair because for the first time for years, she felt free again. A Minimax user in Japan with the ALS who lost his voice used Minimax voice model to speak to his family by his own voice. So this is a true utility that all this technology bring to our users. So now I know everyone in this room will want a clear view of the future. So today we invite many of our young and brilliant entrepreneurs with us, and they are super busy, as you can imagine. Thank you guys for making it. So I encourage you, talk to them and feel their passion, get their insight, because they are the ones who build the future. Thank you.